Hello there. I just wanted to bring you a brief update. It's Friday the 13th of December, and of course, no doubt you've heard by now that the Conservatives overnight have stormed to a very significant majority in Parliament. I think this is great news for a number of reasons, really. First and foremost, I guess for the first time, really, you could argue since 2010, we've got a single party with a substantial majority government. So, all things being well, this should now give us a full 5-year term with a single party in office that's able to pursue its legislative agenda. So I think almost regardless of where you sit on the political spectrum, I think this could be positive just to allow the country to move forward and implement, perhaps more importantly, some domestic policies in addition, of course, to the Brexit deal. So on the subject of Brexit, it now appears relatively likely that we will officially leave the EU on the 31st of January. I've said for a long time that I think uncertainty is actually worse than the outcome, even if the outcome's bad and even if you don't necessarily agree with the outcome. I think sometimes the uncertainty is worse. So I think in terms of the market, in terms of the UK economy, actually having a resolution here could be quite beneficial. And indeed, we've seen that reflected in stock market performance today, which I'll come on to in just one moment. Now, of course, the 31st of January is only the point at which we officially leave the EU. We then go into the transition phase. So let's not pretend that Brexit is done and dusted at this point. There'll be a huge level, of trade negotiations that could take quite some time. It's expected that the target date on those negotiations will be the end of December next year, so December 2020. But already there's talk of that date being extended. So although this is the first step on the journey, it's certainly not the end. And of course, we could yet see further extensions and further delays to our complete departure from the EU. And of course, when we do finally separate, that will signal the beginning of our new trading relationship with the European Union, which is yet to be negotiated. So I still think the markets will be sensitive to those negotiations, but it's clear from the performance today that the market has got the outcome it was looking for, and the market certainly values the certainty that this result delivers. So on the subject of the markets, both the FTSE 100 and the FTSE 250 have had a very impressive day today. In fact, the FTSE 250, which focuses on the more domestic British companies that serve the UK market, that's reached a new record today. So that gives you some indication about how highly the value market's the outcome in terms of the election result. So I think that's fantastic news. What's also impressive is that despite the fact that sterling has risen roughly 3 cents on the dollar, the FTSE 100 has also posted some fairly impressive gains today. Now, normally improvement in sterling is bad for the FTSE 100 because the FTSE 100 generates much of its earnings overseas. So when you convert that back into sterling, you now get less for your money effectively. And that suggests to us that that the market positivity around the election result is sufficient to outweigh that negative drag on market performance, which would normally be the strengthening of sterling. So it's one of those days where everything is green. Sterling has strengthened, which is generally speaking good for the sort of domestic companies. Not so good for international companies, but the positive sentiment there has meant that they've performed very well also. So I think a very good day on the markets. And there's now some suggestion that we could hopefully see some further improvement because the Brexit decision, the certainty around that will start to unleash several rounds of investment that companies have been holding back during the period since the referendum in 2016. Now, it's also worth mentioning that I think the Conservative victory is a victory for personal financial planning as well. It's no secret that Jeremy Corbyn had some fairly anti-wealth generation policies. He was proposing to increase most of the personal taxes, income tax, capital gains tax, proposing to remove entrepreneurs' relief on company sales, remove dividend allowances. So I think it's fair to say that although the Conservatives plan to maintain the status quo largely when it comes to personal taxation, that status quo is actually very generous. And I've said for a long time, I think we're in one of the most generous personal taxation regimes perhaps that we've ever had at the moment. So despite the fact it might not appear that exciting, not a lot's changing necessarily, I still think the personal tax regime moving forward is going to be incredibly generous. And the final point to mention just on this update today is that you might have missed this in the sort of election noise, but overnight President Trump has also indicated that there's been some substantial progress in relation to the US-China trade deal. And although we're waiting for sort of official confirmation on that, it does appear that some progress has been made. So that's also boosted the US market both yesterday and today. So it could well be that, you know, Friday the 13th has been incredibly lucky, not just for markets in the UK, but also in the US as well. And of course, it would be incredibly encouraging to see some kind of resolution to the US-China trade war, which has been one of the other major areas of uncertainty in the market during 2019. So I think all in all, as far as investors are concerned, as far as markets are concerned, the result today has been incredibly positive on both sides of the Atlantic. Of course, you may have a different political opinion, you may have a different opinion on Brexit, but if we focus for the moment just on sort of personal finance and investing issues, I think broadly speaking, we've got a very positive outcome. The Buckingham Gate Investment Committee is going to be convening as we go into next week. We'll be analysing what this means in terms of investment portfolios, and we'll decide if we need to make any changes to the portfolios to reflect this result moving forward. As always, if you have any questions, please speak to a member of the team and we'd be delighted to help. Thank you for listening.